Hey guys, welcome back to this week's fundamental recap. We had a pretty big week this week. Not really so much until Friday. Wednesday went as expected, where Powell basically said we're not looking at cutting rates anytime soon. For some reason, people are still speculating that the federal funds rate could be cut as soon as March. I just don't see that happening, especially now that the non-farm employment change came out pretty much double what it was expected. So if the Fed's rates are working, the unemployment should actually be going up, and these non-farm payroll numbers should be going down. So this is actually the exact opposite of what we want to see for a rate cut. Just before we get going, guys, too, make sure you hit that subscribe button. All right, let's dive in. So right off the bat, you guys can see we had another bearish close on the weekly. As of right now, with everything that's coming out on the fundamentals, I would say we're near-term bearish and we're long-term bullish. When the bullish trend will start again, only time will tell. I presume it'll begin around the time the US wants to start cutting rates. Could happen before that. But as of right now, this bearish push will likely continue until it decides to stop. Which is pretty much in line with everything we've gotten with fundamentals. Now, if we look at the COT reports, so this is like the long-term projection too for the asset managers. You guys can see how many long positions we have on the euro compared to the dollar. At some point, the market will realign and we will be long-term bullish. When that time is, we don't know yet. But let's just do a little recap of what actually happened. So you guys can see the dollar actually ended up gaining some strength from Powell talking, even though they did nothing. He kind of assured the markets that we're not wanting to cut too early. If we just do a quick overview here, the US dollar commenced the week on a weakened stance, with the possibility of the Fed adopting a less hawkish monetary policy bias. So now if we look at this even further, the USD managed to recover some losses. Chairman Powell suggested that it was time to start the process of dialing back restriction. He also expressed skepticism that FOMC would reach a sufficient level of confidence by March. With the way NFP came out, there is not a very high probability that they're going to cut in March. So dollar bulls capitalized on post-FOMC optimism on Thursday, when weaker than expected U.S. manufacturing PMI initial jobless claims data dampened prospects for the U.S. economy. So we can actually just do these bullet points here and go over what happened. So the bullish arguments are the job openings unexpectedly rose. Again, if the Fed's policies are working, there should be less jobs. Companies should be laying off. Companies should be borrowing less money. So we were seeing the tech companies laying off pretty heavy, but these numbers will also drop. And when these numbers start dropping, you know that we're getting closer to a rate cut. Now, ISM manufacturing came out a little better than expected. Non-farm payroll, so this number here, so on this one it actually doubled. On forex factory it almost doubled. With this number being this drastic, this is kind of giving the dollar more strength, which is in line with the technicals right now of pushing down. So when I say we're long-term bullish, I'm talking like monthly, weekly trend. I would say daily's bearish right now, and it will likely continue that direction until it realigns with the higher time frame. Now this can happen one of two ways. The European news can start coming out very bullish, and that can start turning things around. Or Powell cuts rates before the European bank does, which will also give the EURUSD strength, and it'll realign. Bearish arguments. U.S. Treasury cut its quarterly borrowing estimates. ADP non-farm employment change. So you can see here, they had it forecasted at 148K. We came out at 107. Anything to do with jobs should be coming out as expected or lower. And that's kind of how you'll be able to tell how quick, how likely the Fed is to cut. So we're looking at CPI, we're looking at NFP, and we're looking at anything to do with employment that's kind of telling us how the economy's doing overall. Let's see, Chicago PMI fell, nothing too big there. Fed Chairman Powell, it's highly consequential decision to start the process of dialing back restriction, but push back against March rate cuts. So you got to remember too, he said no rate cuts before NFP even came out. By the time NFP came out, this is pretty much a guaranteed no rate cuts in March. So we're probably looking at April at the earliest. Now, when we look at the European side of things, at the last ECB meeting, it was basically discussed that it's very unlikely that we're going to cut rates anytime soon. They were talking about the end of summer. This member here says possibly in June. So we'll kind of see what happens here. I'm speculating that the US will cut before the European Union. So there's a lot of bullish arguments for the European side of things, and that's kind of what I'm expecting to happen as the European fundamentals will keep coming out more bullish, and eventually it'll realign us with the long-term trend. As of right now, I wouldn't be looking at reversing the trend. When the market does change the trend, you guys will definitely be able to tell. It'll usually do something along the lines of starting to go sideways where it's not really making highs or lows, and it'll kind of create either a rounded bottom or just pure sideways action. If we kind of look at this right now, we're just consistently making lows. So anytime the market finds bottom, we'll see something like this, and usually you'll get some momentum. And that would kind of be the end of the bearish push for me. Until that happens, I would likely not try to reverse this and just continue in the same direction. But yeah, that's about all there is to cover right now. The only eventful thing we really had was NFP. Everything else kind of came out as expected. FOMC really didn't do much. It likely won't for the next few meetings. The only thing that might is Powell talking, where he will kind of give us a sentiment of what the other board members are thinking and what direction the Fed's thinking of going and how soon they're thinking of doing it. So the interest rate decisions themselves won't be the big one, but Powell's meeting after the interest rates will be. So we'll just keep an eye on that. Yeah, that's really all there is to this week, guys. Make sure you tune in next Sunday where we'll do another overview of what happens this upcoming week. Yeah, thanks for tuning in, guys. I will see you next Sunday.